Okay.
So accounting is a financial information for various stakeholders, including shareholders, bankers, customers, employees, government. Like various stakeholders are using the financial information for various purposes. Like the bank people want to know what is the company profit, what is the company sales, what is the growth for last few years. Shareholder, they will see the company's earnings. Employee, based on the financial information only, they will expect next year's salary hike. Customer also,
Okay.
they what they can see the company performance indicate the company is a good company because there is some people buying more product, the company sales are increasing. Like various people are giving the priority for seeing the company financial statements. The company statements are income statement, nothing but profit and loss account and balance sheets. Okay, Rahul?
हाँ,
Huh?
अभी मतलब ये डिपेंडिंग ऑन दिस फाइनेंशियल इंफॉर्मेशन कंपनी प्रोग्रेस विल बी हैपेंड एंड
No,
वेदर
no, that will we can see. We will see the company progress in the finance statements only.
ओके
Okay, the company, what are the finance statement information is company balance sheet and profit and loss account, nothing but income statement. Okay,
बैलेंस
the
एंड
balance sheets,
बैलेंस
profit
शीट
and loss account are income statements.
इनकम स्टेटमेंट इनकम स्टेटमेंट
So financial information is helpful for taking various kind of decisions making. Based on information only, the management will take a decisions.
ये मतलब ये इस बेसिस ऑन द मतलब ये तीन चीजों पे
Hmm.
फर्स्ट पॉइंट में क्या होता है फाइनेंशियल इंफॉर्मेशन मालूम होता है बैलेंस शीट क्या है इसका प्रॉफिट एंड
Hmm.
लॉस अकाउंट और क्या
Hmm.
इनकम स्टेटमेंट कितना इनकम
Hmm.
कर रहा है पूरा हो गया बात एबिटा कितना निकल रहा है
Hmm. Okay.
एबिटा भी इसमें ही आता है ना फाइनेंशियल इंफॉर्मेशन में
फाइनेंस स्टेटमेंट लेके रेशियोज बनाते रेशियोज में एक रेशियो आके एबिटा था
अच्छा
सो ये बैलेंस शीट इनकम स्टेटमेंट बेस करके कैश फ्लो स्टेटमेंट फंड फ्लो स्टेटमेंट रेशियो एनालिसिस बनाते सो रेशियो एनालिसिस में क्या मालूम होता कंपनी का परफॉर्मेंस कैसे हाई करके तो मालूम होता वो
बेस्ड ऑन द
ईपीएस
बैलेंस शीट एंड
एम
इनकम स्टेटमेंट
हाँ ईपीएस एमपीएस ओके डिविडेंड पर शेयर अर्निंग प्रॉफिट ईबीएटी okay EBT, like various ratios we can find through this financial information only.
ओके
Okay.
जी
And the second part, accounting standard with separate reference to accounting for depreciation, inventories, and revenues. So accounting standards means in a business there are different kind of business operations are there. Like pharma industry, it has own operating process. That is business process. Cement industry, they have their own business process. Electric industry, they have their own business process. Paint industry, they have their own business process. Like every industry is unique. They have
करेक्ट
their own accounting procedures, are there, procedure as well as business processors. But here the common thing is accounting standards are common for all kind of business people. All the kind of businesses accounting principles are same. Accounting standards are same.
same
Accounting
correct correct
standards are
based on that
same for
only they
irres.
will be
Hmm.
based on that only they will be creating their own company like मतलब जैसे कंपनी को क्या चाहिए वो ये बिजनेस स्टैंडर्ड के बेसिस पे वो लोग डिजाइन
Yes.
कर लेते हैं अपना
It's uniformity.
अकाउंट
Uniformity आना है irrespective of business process. So they need to maintain uniformity in their accounts when they
अकाउंट
prepare uniformed accounts are there. For example, if you take an example of accounting for depreciation. So there are different types of depreciation methods are there, like what we call fixed installment method, written down value method. Some of these methods are there. So which method is suitable for this? Which kind of industry? right? So they need to follow. So this year we selected one method. Next year we can't select for another method. If you change one method, there is a not get a good calculation for the depreciation. Sometimes is more amount, sometimes is less amount. So that is the reason they need to follow accounting standards for calculation of depreciation of these fixed assets. So fixed
So
assets we
uniformly,
calculate.
so you will be getting the uniformly depreciation every time, not different value, right? For that,
Yes,
you
if
will
you
be
want, if they want to change, they will be give the justification why they moved one method to another method.
okay.
Why? Because there are various methods are there. So they need
Correct.
to maintain consistency, okay, for this using the method. So that is the reason
Can you
accounting
list
standards
down the different depreciation methods? Can you just list out
like fixed install method, fixed
fixed
installment method,
okay,
written down value method. These two are very popular.
written down method? Okay.
Okay. So that is
Nice.
the reason accounting standards always says that you need to maintain uniformity for maintaining this depreciation. So depreciation is a expenditure of the company, is a indirect expenditure,
Yeah.
is a purely indirect expenditure.
Correct.
Like they say that here fixed assets and the recognition of revenue. Here recognition of revenue is a continued word. Recognition of revenues.
Okay.
Okay. Foreign transactions. Go for one by one. The
Yeah. Yeah.
first,
Sure.
second one is inventories. So
Inventories.
when you
Yeah.
invent nothing but the company, those company are involving their manufacturing
Store.
process. So they
Mhm.
need to buy raw material. They need to buy
Correct.
inventory like cement, sugar, the pharma companies. They are buying inventories. What
Inventory
kind of
is also in
method?
the terms of like, storage location also, right? Inventory means they will be storing area
No,
wherein
no,
you
no,
they
no,
will
no.
be
Is a
storing
raw
the
material. Invent nothing but it's raw material. Sugar cane is a raw material for this sugar factory.
material.
Stone
Okay.
for raw material for this cement factory.
Okay.
Right. Biscuit factory is atta is their inventory.
Okay.
Bread industry, atta is industry. Like atta is
Okay.
inventory. So like
Okay.
base why this inventory is very most important. In a manufacturing company, they spend more amount for this inventories. Maximum 60 to 70% the cost for this inventories.
Okay.
That is the
So the
reason
raw
the
material,
most
basically we will calling as an inventory, right?
inventory raw
Inventory
material
side.
is called as inventories. Sugar
Okay.
cane
Okay.
is inventory for sugar factory.
Correct.
Okay, but here the
Okay.
problem is here also there are various kind of methods are there to calculating inventory value. Why? Because the sugarcane values are changing based on the market movements. They're not the
Correct.
same for every
Yeah.
time. So like the inventory values also change. Here they need to calculate the inventory values using various methods are there, like FIFO method, FIFO method, first in first out method,
Yeah.
LIFO, LIFO, LIFO,
Last in
last
first
in
out.
first out method, weighted
Yeah.
average method. Okay. So like various methods are there. Each method is different, but the company has to maintain the uniformity using this method. Either they
Okay.
choose for last in first out or first in last out or weighted average method. It depends upon this what we call the shelf life of the inventory.
Correct.
Shelf life inventory, nothing but it's a perishable or non-perishable.
Yeah.
Okay. So
The
that is
life
the
cycle,
reason.
like how much they will,
Uh, uh,
how
that's the reason
long
they
they will.
can they can maintain uniformity in their accounting systems.
Okay.
The
So
third
W
topic
stands for
is
the weighting, right? Weighting average method, right? Weighting.
correct weighted
W
average
stands.
method. Weighted average.
Weighted. Okay.
Weighted
Weight.
average
Okay.
method. Weighted average method.
Okay.
Weighted average method.
Okay.
The next one is revenue recognition. So
Okay.
revenue recognition is sometime what we can do is first we will sell the product, later they will pay the amounts.
Okay.
Okay. revenue recognition method.
The things are they taking on a credit, the
Yes, credit
cumulative,
sales,
right?
the thing are the credit sales. But how we can
Mm.
treat? For example, if you sell a product in the month of March, but we'll
Mm.
get his amount in the month of May. So that is the next financial year. The
Correct, exactly. Yeah.
transaction are reflecting 2 financial years,
Mm.
right? How we can recognize the revenue? Either receive time or sale time, okay, or amount created time. So that is the reason the accounting standards talks about you can follow the revenue recognition model. It is different for industry to industry. Like you can say
Okay.
that Amazon subscription which pay 1,500 rupees. So on that
Mm.
month they will get more amount, but the amount will be go for next 1 year, right?
Correct, correct.
They can't say that whatever the subscription amount are their total revenues, right?
Yeah.
That revenue not the one particular day, that revenue for entire 365 days.
Entire year. Correct, correct,
So
correct.
that part also they can use, they can understand the accounting standard importance. So next one
Okay.
is fixed assets. So fixed assets also what they can do is the accounting standards it talks about. So how to measuring this fixed assets value? Land, land there is no
Okay.
depreciation, but building, fixtures, other assets are there. So how to treat
Yeah.
the accounting standards for these fixed assets? And foreign exchange transactions, the reason foreign exchange transaction
Even
reason is
the machineries, that those all those things will be comes under the fixed assets, right?
correct.
Or see, just want to have clarity. Like for the material, whatever the asset we are having in the industry, it is might be in any particular industry organization.
Yes.
If it is a asset is there, which is in
Hmm.
if the value is getting decreased, will be considered as a fixed asset or not? Or
No,
it is
the
not
thing
way
is,
related to the depreciation or increasing of the value.
so see that the fixed
Asset is
asset, if you use for the business process, the value is
okay.
depreciated, like land and
Oh yeah,
buildings, furniture, fixtures. But
correct.
can't say that land value. Land there is no depreciation, is depletion is there. The land depletion. The value can be increased or value can be depreciated. Okay, what we call
Okay.
amortization is there. Goodwill is also asset, but there is no depletion for goodwill. Amortization is there for this. For example, current assets are there like cash in hand, cash at bank, bills receivables, sundry debtors, okay, short-term investments. But we can't any kind of depreciation for this. Okay. The next one is foreign exchange transactions. Foreign exchange transaction. Here, the two countries have different kind of currencies are there. Like our is INR, USD, American dollar. But the dollar value against rupee are fluctuating very frequently, right? For example, if you
Yeah.
export our tomatoes to USA, the
Hmm.
today dollar value is 89 rupees. But when you get a payment, the value can be 85. We make a loss,
Correct.
right? So
Yeah.
foreign exchange transactions, why? Because the currency is a medium of exchange. The medium currency value is appreciate or either increase or decrease due to the market demand and supply. So at that time also we need to maintain accounting standards. We need to follow accounting standards rules. Okay, we need to
Okay.
maintain accounting standard rules for these foreign exchange transactions. Maintaining of uniformity, right?
Okay. Yeah.
Why we accounting standards are required? You saw the accounting standards are required for the global players are chartered accountants are legal entities like income tax
Hmm.
or GST, whatever the corporate tax and the Companies Act. So they're asking further the companies are implementing the accounting standards or not. Not they can write the general the transaction. No. So they need to follow accounting standards, rules and regulations to maintain uniformity in their accounting systems.
Okay.
Okay. The next one is
Got it. Got it.
investments. The investments is the value of once today invested, we invested today, but after 5 years, the value can be increased or sometimes can be decreased. So how to consider it? For example,
Okay.
in their books of account, they show that the five. they purchased land for 10 years back, right? 10 years back, it is only 50 lakhs. But they will show in their books only 50 lakhs only. But real value may be 100 crores, right?
Correct.
They can't show 100 crores in their balance sheets. They will pay only 50 lakhs only. Why? Because they will
Then
show in the book values. They can't show the market values. The
market
investment's
value.
market value is differ for period to period. That is the reason the
Yeah.
accounting standards are said about in these investments also. So investments also depending upon the market movement and the demand and supply, right? The basic is either you can go for book value or market value. Book value or market value,
Okay.
right? So
Book
like
value means whatever we invested and in
when you are
initially what
correct,
yeah,
correct, correct,
yeah,
correct.
what you have spent money on it, so that will be considered
Yes,
a book value.
correct.
The
So
market
whatever
value
the
is
value
whether
written in the book, whatever the value
yeah,
written in the book
yeah,
when at the time of purchase.
purchase. Purchase.
The next part is cash flow statement, fund flow statement, and finance statement analysis, including ratio analysis. Right. So here,
Mm.
these cash flow statements are very most important to understand the business process. To understand this business process, the cash flow statement is very much useful. Thing is, in a business organization, there are plenty of accounting data is there, out of which the company prepare balance sheet and income statement, nothing but profit and loss accounts.
Yeah.
Right? But out of which, the based on the income statement and balance sheets, the companies are preparing the cash flow statement. Cash flow statement. There are three words are there. Cash flow statement.
And yeah.
What are the sources cash inflow in the organization? What are the
Yeah.
sources cash outflow for the organizations?
Mm.
Inflow of cash, outflow of
Or
cash.
cash. Okay.
Inflow of cash and outflow of cash. Right. Inflow of cash, nothing but you see that company sales are there.
Yeah.
Sales, right? Or company take a loan, cash will flow. Or sale of any fixed assets. Sale of assets, right?
Correct.
Sale of assets also cash will come. Sale of
Or
assets,
any if there is
bank
any
loan,
interest they are getting. Yeah.
interest on the bank, okay, bank deposits. Okay,
Bank
these are
deposit.
the sources of this inflow. But
Inflow.
at the
Yes. Correct.
same time, how are as what we can say that issue of shares also. Issue of
Mm.
shares, debentures, bonds, the cash is inflow. But cash is
Debentures and
outflow.
shares are like almost same, right? Debentures
No, no,
and
no,
sorry
no.
bonds.
No, no, no. Debentures and bonds are similar.
Similar, yeah, bonds and debentures. Yes.
Both are repaid after certain period.
Yeah.
Okay. This is the cash inflows. The second cash outflow is opposite. Purchases, right? Purchases. If you purchase anything, the cash will flow outflow. At the same time, loan repayment.
Maintenance, yes, loan repayment.
Okay. Repayment. Or purchase assets.
Gotcha.
Well, earlier is sale of asset. Now is the purchase of assets. Right.
Purchase of
Now redemption of these bonds. Redemption or repayment. Repayment to these bonds. Like here in cash flow statement, all the transactions are categorized into three routes. See that transactions related to operating activities, operating activities, operating
which
activities.
what you
All
are
the
classifying here?
here cash
Financial.
flow statement, all the transactions are classified into three:
Okay. Okay. Transactions.
operating activities, financing activities, financial activities. Third one is investment activities.
Yeah.
So cash flow statement consists of three different kind of activities. That
Activities.
is financial activities. Right? These three activities are there.
Okay.
Okay. So why these three important mean the company generated the revenues, cash inflows on what basis? Okay. So that is the reason to see the cash flow statement, we'll understand the cash is flow and on what basis, either operating basis or financial basis or investment basis.
Yes, okay. Operating in the sense like how, for example, here
Operating
employees
operating is not,
employees
operating is very simple. Operating is very simple. Sales and purchases,
sales and
right?
okay.
The regular activities. Okay.
Manpower
Regular.
also comes under operating activities, right?
Which one?
Manpower, operating activities.
Correct.
In an organization, operating in the sense like, is it my
Right.
understanding is correct? Like whatever the work is happening under this, so that will be coming under operating.
See the regular activities. Regular activities, we purchase raw material, payment of salaries, okay, payment of stationary
Okay.
expenditures. The regular activities, the operating activities. The activities will
And
done 365 days. The financial
okay.
activities, what we can do is we can't take daily loan, but we'll pay monthly
Yes,
interest on the loan. Right.
correct.
We can't sell our fixed asset at 365 days, but we'll sell our fixed asset at a later part. We can't recognize the asset is not suitable for generating revenues.
Okay.
Right.
So
The
more
investment
one time.
activities, yes, very rare.
Yeah.
Okay. The second one is fund flow statement. Here also there are three words are there. Fund
Okay.
flow statement.
Yeah.
What is in the fund? Fund nothing but cash and cash equivalents. Fund means cash and cash equivalents.
Yes.
Cash and cash equivalents is called funds.
Right.
Okay,
EQIVALN.
okay. Equivalents.
VALN.
Okay, cash and cash equivalents. Here also what we can do is the flow of funds. How much funds are inflow? How much funds are outflow? Inflow of funds and outflow of funds. So here
Fund.
what we can do is we can understand the company's working capital position. The purpose is working capital. Working
Okay.
capital.
Capitals.
Working capital. Okay. Nothing but current assets
Mm.
minus current liabilities. Is the company is maintaining proper working capital or not? Okay.
Current assets minus
Current liabilities.
liabilities. Okay.
Yes. So we can understand here
Liability.
operating working capital.
Just I want to know
Operating.
about the liabilities. What
Hmm.
does it mean liability means? Assets
Liabilities
I
are
know,
nothing
like
but
for which we.
liabilities are nothing but liabilities are nothing but the company's outstanding expenses, sundry creditors, bank interest, bills receivable, bills payable, bank
Okay.
overdraft, all are current liabilities. So it means the liabilities need to be
No,
paid
no,
within one
no.
year.
Okay. No, in general, liabilities means like expenses, right?
So no, expenses are different, liabilities are different. The expenses are paid within a
Okay.
whatever the period. For example, first month of every month the company has to pay 30th of January. 30th of every month they need to pay
Okay.
salaries, right? But the company paid
Yes, yes.
15th of next month,
Hmm.
15 days late. The 15 days considered as
Late.
a liability. 15 days considered as a liability. 15 days considered as a liability.
Okay.
Okay. Once amount is paid, will show
Okay.
as a expenses. If amount is to be paid, will show as a liability, it's a current liability. yet to be paid.
Okay, okay, got it, got it.
Mm. So here,
It will be
the fund
considered
flow
as
state,
a liability.
yes, the fund flow statement are also say that it talks about either flow of cash, flow of funds, right? Either what are the sources or applications of funds, sources and application of funds, sources and application of funds. The purpose is we know the what are the sources of the funds, right? What is the usage of the funds, okay? And what ways the source of the funds, like the company can sell their fixed assets or sell their taking a bank loan, okay, or issue these debentures, bonds. These are the sources of the funds. And applications, whatever
Okay,
they mobilize the funds and using for what purposes, either
okay,
loan repayment or purchasing a new assets or going for any mergers or acquisitions or they want to expand their business operations, right? So that's the purpose we understand the applications. What are these applications of the funds and uses of the funds? So
sources.
how we can know this? Through preparation of the fund flow statement, we'll know the what are the sources of funds, what are the utilizations of funds. Okay, Rahul?
Okay, okay.
Okay. Sources and applications.
Yeah.
What are the sources the company get these funds? And once they get a fund, where they are utilizing these funds.
Utilize. Yeah.
Okay. For example, I need to take a 10 lakhs of loan. It is my source. 10 lakhs
Yeah.
is my
And you
source.
are buying. Yes.
Any asset or anything, it is called applications.
Application.
Okay.
Got it. Got it.
The very most important one is the ratio analysis. The very, very, very important one is ratio analysis. The purpose ratio analysis is you to easily understand the entire accounting information in a fingertips. For example, there
Okay.
are 100 companies are there. We can't spend time for studying the all 100 company balance sheets, right? But
Correct.
you can compare ratios one company to another company. You can understand this company is good or bad. The company performance is better or not. So that we can understand based on this ratio analysis. So
Efficient.
the word is ratio means the relationship between two numbers. Ratio means relation between two
Correct.
numbers. So in
Correct.
accounting, what we can do is we will compare two different transactions in a ratios. Like the ratios are what we call current ratios, liquid ratios, turnover ratios, okay,
Okay.
long-term ratios, assets movement ratios, various ratios are there. So these ratios are useful for taking a decision-making purpose. Okay. So every company,
Okay.
as in a stock market, they see the ratios. What is EBITDA? What is
Yeah.
EPS? What is ROCE? Okay, return on capital employed. What is liquid ratios? What is debt equity ratio? All the ratios they want to see through ratios. The
Yeah.
input is what is the input of to these preparation is balance sheets and income statement.
Income stream. Okay.
So based on this, only the companies are preparing ratio analysis for taking various kind of decision making decisions. As an employee,
Yeah.
he will take a decision either they want to continue the organizations or not. If the company paying
Okay.
higher salary, if the company performance is good, he will expect more salary. Right? As a banker,
Yeah.
they will see the company balance sheet and income statement. If I give a loan, are the company repayment in time or not? Is the company is
Correct.
able to repay? Like they want various people have the different kind of purposes to see the company balance sheet and income statement.
Yeah.
Right? So that is the purpose of preparing this ratio analysis.
Ratio.
So next one is accounting for share capital transaction, including bonus shares and right shares.
The one
Okay.
more topic was there, fundamental analysis, I think, in the book.
Under
Sorry,
fundamental
financial.
analysis, and
Sorry,
sorry,
financial. Financial.
under finance statement analysis, under financial
Yeah.
analysis, these are there. Okay,
Okay, ratio
like
analysis.
trend analysis, trend analysis, trend analysis. They will see the trend. Last year,
Okay.
company sales, how much it is. Okay, or they can see this compared to statements. Comparative statement, common size statement, common size statement. Right. So the comparative statement, common size statement. The comparative means they compare one company performance with another company performance. We can compare the
Okay.
company revenues for one company to another company. For example, A company is a cement company, B company is a cement company. So A company
Okay.
performance compare with B company. At the
Yeah.
same
Okay.
time, the company can compare their performance with previous years. How much
Yeah.
percent the company performance are increased in terms of all
Increase.
areas, either cost, either revenues, either assets, right? They will compare. Okay.
Yeah.
That's the purpose they're using these methods, trend analysis, common size, and comparative statement.
Got it. Got it.
Now we'll move to this right shades and bonus shades. The bonus shades are additional shades. These shades are issued for existing shareholders. Instead of paying this cash in the form of dividend, they will pay bonus shares. For example, company get 100 crore profits,
Okay.
100 crore profit company. So this profit
Yeah.
belongs to shareholders,
Correct. Exactly. Everybody need to be getting divided
right?
equally. Yes.
The company has the company is a has a good investment opportunities are there. Now the
Mm.
company may think instead of paying 100 crore rupees in the form of dividend, right? If you pay
Okay.
dividend, the cash is go outside, right? Cash outflow.
Yeah.
So instead
Exactly.
of paying outside, the company say that we will pay 100 crores worth of bonus shares for the existing shareholders.
Okay. Okay.
Earlier,
Okay.
Rahul has 10 shares. Now we'll get two additional shares. It is called two bonus shares are there.
Yes. Yes. Like a company normally they will be every 6 months or 1 year. If they will be co-dividing the shares. Yes. Means if
That is
there is
called
a
sometimes splitting is also there. Splitting is also there.
splitting. Yeah. Splitting. Yeah. Yeah. Yeah.
Splitting
Exactly.
is also
Exactly.
there.
Yes. Yes. So that
So
this comes under the bonus shares. Okay.
that the company can do for the various purposes. The
Actually, I
object
lost your
is
voice. Hmm.
the object is they need to
Now I can.
what
Now
we
I can
can
able to hear.
to happy with the existing shareholders.
Yeah.
At the same time, whatever the profits are there, these profits are utilizing for this company expands purpose, enter new business operations, enter new segments. Okay, so that's the purpose. The bonus shares are issued. Okay, the second concept is right shares. So right shares also issued for this existing shareholders. So there's one for this public platform. If the company required 50 crore rupees, uh, 50 crore rupees for expanding business operations, or they can take any another company, okay, another business. They need 50 crore rupees, right?
Okay.
They have multiple options, either taking a bank loan or issue the bonds or debentures, or they can issue the shares. Like they have three alternatives. The objective they need 15 crore rupees, 50 crore rupees for take a completed business, or they can expand their existing business. Out
Okay.
of
Okay.
which,
Okay.
if you take a bank loan, they need to pay interest
Correct.
irrespective of company profits,
Hmm.
right? The bond,
Yes.
if they issue the bond, also they need to pay interest after stipulated period. They need to pay principal amount also. So both
Correct.
are is increasing the financial risk, right?
Okay.
The company instead
Yes.
of
Yes.
taking a bank loan or issue a debentures, the company prefer to issue these shares, equity shares.
Okay.
Okay. So equity shares, what they can do is they give the priority for the existing shareholders. They have a right to buy. They won't sell the public domain. They say that those are
Okay.
the existing shareholders. They give the
Okay.
priority whether to buy this company shares. So
Yes.
that is called right shares. It is option. The right shareholder may or may not be buy, but the
Okay.
priority given to this existing shareholders.
Shareholders.
So that is called right shares.
Right shares.
Okay.
Here,
So
like,
employee.
got it.
Hmm.
Means they are
Correct.
in internally only they are sharing giving the right shares
Hmm.
for getting valued means inflow to the organization if
Correct.
required.
Correct. Correct. The next thing is employee stock options and buyback securities. Employee stock options and buyback security. There are two concepts are there. The first one is employee stock options. Mean the existing employees they can buy the company shares. Why? Because the employee, if you a company employee, if you buy a company having a company stocks, he feel more responsible,
Yeah,
right? Why? Because he feel as I am also one of the partner of the business.
partner, correct.
I will also participate AGM meeting, annual general meeting. If the compound company performance well, I will get my
Yeah,
salary as well as I will get my stock values are increased,
correct.
right? So that's the reason company what they can is they can give this employee stock options also. Or say that the company can say that no, instead of giving company salary hike, we'll give 10 stocks. But India is not that much flexibility is there. Okay.
Correct.
Like the board of directors, others say that you have to at least have some stocks of this company.
Yeah,
Okay.
earlier like they have this demand people have given to their employees, the sales
Correct.
guys.
Correct. Correct. The second thing is buyback of securities. Buyback. Mean the
Buyback.
companies buy its own stocks. Like Apple.
Okay.
Apple company, they will buy back their own stocks. Why? Because the company has a good cash flows. So these classes,
Okay.
what they can do is they will buy back the shares. Previously, they sell in 100 stocks in the public. Now
Okay.
they go in the stock market, they will buy the company stocks. Earlier, 100 stocks are 100 shares are there. Now they will
Okay.
buy 10. Now the available
10.
is 90 only. The next table they will go and buy 20. The available in the market is only 70. Okay.
70.
So mean they need to control the business. Why? Because the company is a very top-notch company, there are good cash flows. So these companies, they buy back the company stock. Okay. That's called company buyback of securities.
Okay.
Buyback of its own securities.
But
Okay.
more rarely it will happen, right? Buybacking
Very
of
rare, very
security.
rare, very rare, very rare. India, we can't see as much of buybacks. But in
Okay.
US, we will see these top companies like Nvidia, Apple company. Okay. These companies will buy back the company stocks.
Mm.
Okay. Next, preparation and presentation of company financial accounts. So, as per Companies Act 2013, Companies Act 2013. So, every
Okay.
company has to follow some rules and regulation guidelines are there to prepare this company finance statements. And these statements are submitted to the company register and putting the company domain, accepting this company AGM meeting. Okay, all these to follow these rules regulations of Companies Act 2013 to prepare things cash flow and fund flow. The company final accounts. Okay.
This the last one.
Hmm.
So present.